Good morning. Welcome to CATEX-TV. This is a live broadcast from Princeton, New Jersey. My name is Frank Fortunato. Today is Monday, March 9th, 2009. It's 11:30 a.m. Eastern Daylight Time in the United States right now. It's 3:30 p.m. in London, 9:30 a.m. in Mexico City, and 12:30 p.m. in Bermuda. If you need to reach me during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. A little note on history today. In 1975, 34 years ago today, work began on the Alaska pipeline. We have some breaking news. You undoubtedly know this, but it seems to be a big deal in the pharmaceutical industry. Merck, before the markets opened this morning, announced that it will buy rival Shearing Plow for $41.1 billion U.S. in cash and shares. Merck is interested in expanding its presence in emerging markets as well as bolstering its pipeline in new medicines. Merck apparently has a number of drugs that are coming off patent imminently. The two companies are also partners already with the cholesterol drug Zetia and Vytorin. The transaction, valued at about $23.61 a share of Shearing Plow stock, represents a premium of 34% to Shearing Plow shareholders based on Friday's closing price. The stock market right now is up about 7 points, so it's neutral to positive. Now to our main news. About an hour and a half ago or so, billionaire Warren Buffett of Omaha, the Oracle, appeared on CNBC, which is an American cable business channel. He said that the U.S. economy has, quote, fallen off a cliff over the last 6 months. He also noted that consumers have changed their habits in remarkable ways. He said that the current economic downturn has basically followed the worst-case scenario he envisioned. Quote, it's fallen off a cliff, Buffett said. Not only has the economy slowed down a lot, but people have really changed their habits like I haven't seen. Buffett said the changes are reflected in the results of Berkshire Hathaway subsidiaries. He said, for example, that their jewelry companies have suffered and more people have been willing to switch to Geico auto insurance to save money on car insurance. He predicted that unemployment will likely climb, quote, a lot higher before the recession is done, but he also reiterated his optimistic long-term view. He said everything will be all right. We do have the greatest economic machine that's ever been created. He said that fear and confusion have been driving consumer and investor behavior in recent months. He said that the nation's leaders need to clear up the confusion before anyone will become more confident. And he said that all 535 members of Congress should stop the partisan bickering about solutions. A little note that came up in his interview as well, he indicated that in order to keep a comfortable cushion of capital on hand, the Berkshire Hathaway insurance and reinsurance subsidiaries will sell less catastrophe reinsurance this year. He says he aims to keep an absolute minimum of $10 billion in available capital on hand in the company. He said, quote, I'd like to have quite a bit more than that to be sure we don't go below that. We could have a hurricane, which would deplete reserves. What has changed is that we will do less catastrophe reinsurance this year. More news coming out of Zurich, regime changes related. It now seems as if Peter Forstmeier, the chairman of the board of Swiss Re, has departed. He has resigned. This is just a few weeks after they replaced Jacques Aigram with Stefan Lipp. This latest reshuffle continues Swiss Re's effort to go back to basics as it looks to refocus away from a failed capital markets expansion strategy more toward a traditional property casualty business. Mr. Forstmeier has been replaced by a fellow named Walter Kielholz. Kielholz, shown here, first joined Swiss Re in 1989, and he held the post of CEO at Swiss Re from 97 to 02. He also, as of the time of the appointment as Swiss Re chairman, was the chairman of Credit Suisse. Credit Suisse made some moves immediately and announced that he had stepped down in order to focus on his role at the reinsurer. Hans-Ulrich Dorig, currently vice chairman of the bank, has been nominated to replace Kielholz as chairman of Credit Suisse. Kielholz told a press conference in Zurich that Swiss Re wants, quote, a significant reduction of risks in the portfolio in order to protect the core business. He said it also aims to develop the core business of reinsurance, which according to him is healthy and has a lot of growth potential. About 400 miles to the west, the London Times is reporting that Brit Insurance, the patriotically named insurer, is planning to announce today that it will confirm a move of its headquarters out of England for tax reasons. Brit's decision comes after months of deliberation and is based on what many see as an unfavorable corporate tax structure. It's understood that Dane Doté, Brit's chief executive officer and a leading figure in Lloyd's, favors a move that would keep Brit within the European Union. Brit confirmed last summer, as we reported, that it was looking at relocating its tax headquarters. As a result, it hired a number of advisors, including Ernst & Young, to examine its options, which will also take into account where it holds its capital. In a trading update last month, Brit said it was on course to smash the market's profit expectations for last year, mainly because of changes in exchange rates. However, recent suggestions that Brit may also tap investors for up to £150 million, possibly to make a bid for Chaucer, are thought to be unfounded, at least for now. In other Lloyd's news, Hiscox has apparently ruled out the need to raise capital, as it announced pre-tax profits that more than halved, dropping from £237 million down to £105 million, despite a strong underwriting performance. The company's CEO, actually the company's chairman, Robert Hiscox, said, "Our balance sheet is strong and sufficient for our current plans. We like to use our capital as is prudent to keep the returns to shareholders as high as possible." Mr. Hiscox added that the company last raised capital through a rights issue in 2005, bringing in £170 million net. Since then, it has returned £207 million to shareholders through dividends and buybacks. Of course, Hiscox, as well as Brit and Hardy and Catlin and Chaucer and Omega and Beasley, have been linked or have in fact embarked upon capital raising initiatives. Hiscox apparently is signaling that they will not follow. And Bloomberg is giving out some details of the super crisis 2 weekends ago when AIG went back to the government and obtained another lifeline, this one another $30 billion. Apparently, AIG spelled out a dire warning to U.S. regulators. It warned that there would be turmoil around the world if the government allowed it to fail. A 21-page draft AIG presentation obtained by Bloomberg and dated February 26th was apparently circulated among U.S. federal and state regulators. In the presentation, AIG said that it needed immediate help to prevent a, quote, catastrophic collapse that would be worse for markets than the demise of Lehman Brothers. The presentation said what happens to AIG has the potential to trigger a cascading set of further failures which cannot be stopped except by extraordinary means. In the presentation, AIG warned its failure could cripple money market funds, force European banks to raise capital, cause competing life insurers to fail, and wipe out the taxpayers' stake in AIG. Without more American help, investment losses would mean, quote, AIG will not be able to repay its obligation. The Federal Reserve, of course, first bailed AIG out in September with an $85 billion credit facility. Late last year, it increased the package to $150 billion, and then last week another $30 billion was provided. Sounds like the doomsday machine from Stanley Kubrick's Dr. Strangelove with Peter Sellers. Stock market is now down about 7 points. We'll go to a word from our sponsors and come back with the rest of the news.
Every day, the world wakes up and goes to work, pursuing the unique opportunities that lead the global economy forward. The complexity and close connectivity of today's global marketplace is a true modern miracle that can create unparalleled success. But it takes confidence, passion, innovation, and understanding.
Enabling opportunity. Protecting capital.
Engineering innovation.
Investing in your future.
Ensuring continuity.